Hello from the For the CME. This is Chris Robinson with your Traders Exclusive comment today, Wednesday the 31st of May, last day of May. A lot of people I think are happy to see May go. Hopefully June has got some more activity in it. I'm going to start with grains, finish with cattle, and then get out of your hair. Number one, today as I speak to you, corn is back up at the top of its trading range. Corn's almost been schizophrenic for the past several weeks. Lower, higher, lower, higher. We came in after the weekend. We were sharply lower. We've gained all that back, and now we're higher today. But the thing is, we're only in about a 15-cent trading range. July corn can't get through its resistance at around 376. December corn can't get through its resistance around 395. We roll over. We go back down about 15 cents, and then we sit there. We're basically at the mercy of weather now. Now, what happened to get us higher today? Well, we had crop conditions, so we're starting to get away possibly from concentrating so much on what the funds are doing. It's well known the funds are short. That means they're betting on lower prices. If you're a producer, you want those guys to be wrong, because if they're wrong, they're going to have to cover those shorts, and their act of covering those shorts could drive prices sharply higher in a short period of time. So that's the setup we've been talking about for months. Unfortunately, corn's been in an 8-month, 30-cent trading range. It's been some of the most frustrating, irritating trade ever. So again, at some point we're going to move out. We started to get a little bit of information about the crops not being in such a good condition. Some issues with replanting. So possibly that's a bullish story for corn. Lo and behold, we're right back up against this range. So really December corn, which is the stuff that's being planted now, it really needs to make new high ground. It needs to take out about 403, 405 to start getting these fund managers to think about covering their shorts. So we'll see if that happens. It's a coin flip. It's a very expensive coin flip. I've been doing this for 30 years. I've seen a lot of different markets move for a lot of different reasons. Generally, everybody touts the fact that they knew it was going to happen after it happens. That's generally hogwash. What's going to move us is going to be, at this point, one thing: crop conditions, and if the funds are wrong. If the funds are wrong, they'll have to buy their shorts back, and we could get a good move higher. So I'm still a believer that from a speculative standpoint, even from a producer standpoint, I'm looking for rallies to sell into. I'm also looking for cheap ways to catch that rally if it unfolds. Switching over to the cattle. Cattle had a pretty negative cattle on feed last week. They slammed the market pretty good. We came to this week, a lot of people thought that we'd be a lot lower. Market's held its ground pretty good. There's a bullish story out there in cattle. About 3-4 days ago, it was published in Reuters, a story about the fact that China is going to be having possible troubles with their supply chain of beef coming out of India. Now, it's not technically beef, it's water buffalo, but it's what passes for beef. There's also some issues in India where they think that people are actually substituting cattle for water buffalo, which is a big religious no-no. At the end of the day, there's political issues in India which may squeeze off the supply of beef, and it's between a $4 and $5 billion export business for India. And they send it all to China. So if that market was to dry up for China, that's why you've seen them stepping up in efforts to buy more from Brazil. And then also, there's been rumors that, obviously they want to do business with here, United States. So that's the underlying bullish story. Is it going to unfold where it actually does give us new highs? The market seems to want to believe that. Every time we look like we're going to have a decent correction, people are stepping in there buying it. So I would be careful about calling the top of this market. If I'm a producer, I want to make sure that I'm taking advantage of this rally. Even as I sit here today, though, we're within $10 of the contract highs in feeder cattle. Ditto for fat cattle. We're probably maybe $8 or $9 away from there. You're also starting to see some strength in lean hogs. Lean hogs have had trouble getting above 80 cents. As I'm sitting here today, we've popped above 80 cents. So will 80 cents become the new floor? So I'm still bullish the livestock market, just based on the fact that there's this bullish story out there, and a rising tide lifts all boats. Switching over to the grains, we still need to get some sort of weather issue to push corn prices higher. The negative thing, and I want to finish up with this real quick: soybeans. I talked about this, the importance of this 950 level in new crop soybeans, 940. 940 failed. And what that meant was everybody got out of the boat that was long and got short. So we've gone from 940 to about 915 as I'm sitting here, which is a new 8-month low. A lot of people have their eyes on 903, which will be a 1-year low. It was last August's low. So you've got kind of competing issues with traders wanting to sell these new lows in soybeans, with the potentially, if we have new highs in corn, you could watch that spread. So I'd watch the corn bean spread, and I continue to watch for strength in the livestock. That's about it. This is Chris Robinson. If you're looking for help, I've been in the business for 30 years. Give me a holler. We can talk about what your issues are, what your needs are.